Imagine signing a 99-year contract, nearly a full century. And then, just 10 years later, one side says, "We're taking it back." That's exactly what's happening right now in Australia. The government led by Anthony Albanese has announced plans to terminate the 99-year lease of the Port of Darwin from China's Landbridge group. But here's the catch. Breaking that contract could cost Australia up to $3 billion in compensation. $3 billion. That's not just a business dispute. That's the kind of number that affects taxpayers, foreign investors, and diplomatic relations all at once. So, what's really going on? Is this about national security, protecting a strategic port in a sensitive region? Or is this about election politics, appearing tough on China to win votes? Because once you sign a long-term international contract, tearing it up sends a message. Not just to China, but to every country and global investor watching. If Australia cancels this deal, why undo a legally approved agreement that went through open bidding? What signal does that send to companies thinking about investing in Australia? And how might China respond, economically or diplomatically? This isn't just about a port in northern Australia. It's about trust. It's about power. And it's about how countries navigate business in a world where geopolitics is getting sharper by the day. To understand why this decision matters so much, we have to rewind the clock, back to a time when Darwin Port wasn't a geopolitical flashpoint. It was barely surviving. To understand why this deal happened in the first place, we need to go back to what Darwin Port looked like before China stepped in. Today, it's at the center of global headlines. But in 2012, it was something very different. Back then, the Port of Darwin was struggling. An official audit revealed that around 68% of its equipment was outdated or aging. Some facilities were close to being scrapped. Throughput, the amount of cargo moving through the port, had fallen sharply. For a port, that's like a shopping mall losing customers year after year. At some point, businesses stop opening stores. And remember, Darwin isn't Sydney or Melbourne. It's in Australia's sparsely populated Northern Territory. The region has vast land, small population density, and limited industrial base. The federal government had other priorities, and large-scale upgrades weren't coming. So the Northern Territory government made a practical decision. If we don't have the money to fix it ourselves, let's bring in outside capital. In 2015, they opened a global bidding process. This wasn't a backroom deal. Over 60 investment groups reportedly expressed interest. The goal was simple. Find someone willing to invest heavily and take long-term operational responsibility. That's when Landbridge Group entered the picture. Landbridge won the bid with an offer of $320 million for a 99-year lease. The contract went through legal review and was approved under Australian commercial law. At the time, it was presented as a straightforward economic decision, a struggling asset getting a private investor willing to take a risk. And here's something important. 99-year leases are rare, but they're not illegal or unusual in global infrastructure deals. Cities lease airports, rail networks, even highways for similar timeframes. The idea is simple. If someone is going to pour hundreds of millions into rebuilding something, they need long-term certainty to recover their investment. So at that moment in 2015, this wasn't seen as a geopolitical gamble. It was seen as economic common sense. But what made Darwin so attractive to begin with? Why would a Chinese company invest in a remote northern port that others had neglected? The answer isn't just about business. It's about geography. And geography, in global politics, is destiny. Now let's look at the map. Darwin sits on Australia's northern coastline, facing Southeast Asia. If you draw a line from Darwin upward, you hit Indonesia. Go northwest, and you're moving toward the Indian Ocean. Go northeast, and you're entering the Pacific. In simple terms, Darwin sits at the crossroads of two major oceans, the Indian and the Pacific. That's not just interesting geography, that's strategic gold. Think of global trade like a highway system. Ships carry energy, food, electronics, cars, everything. And the most valuable locations are the intersections, the places where routes connect. Darwin is one of those intersections. It's also Australia's closest major port to Asia. For China, the world's largest manufacturing nation, proximity matters. Shipping goods from southern China to Darwin is much shorter than sending them to Australia's southern ports like Sydney or Melbourne. Shorter distance means lower costs, faster turnaround, and stronger trade efficiency. But trade isn't the only reason location matters. Ports are not just commercial hubs. They are dual-use infrastructure. That means the same dock that unloads containers can also service naval vessels. The same fuel storage tanks used for cargo ships can support military logistics. Throughout history, control of ports has shaped global power. Look at Singapore, Rotterdam, or the Panama Canal. Whoever manages key shipping nodes holds influence, not just economically, but strategically. And China understands this. Over the past decade, Chinese companies have invested in or operated ports in Asia, Africa, Europe, and Latin America. The strategy isn't always military, most of it is commercial, but it creates a network of influence along global trade routes. So when Landbridge leased Darwin, some analysts didn't just see a business deal. They saw China establishing a foothold at a sensitive junction in the Indo-Pacific region. That's when the conversation started shifting. What began as an infrastructure investment slowly turned into a strategic debate. Because once you realize how important the location is, the next question becomes unavoidable. Did the investment actually deliver economic results? Or did it create a bigger strategic dilemma? After the lease was signed in 2015, the real test began. It's one thing to win a contract. It's another thing to turn around a struggling port. According to public reports, Landbridge Group began investing almost immediately into the Port of Darwin. They upgraded road access to reduce bottlenecks. They expanded storage areas. They modernized loading and unloading equipment. They built a dedicated yard capable of handling hundreds of refrigerated containers, important for agricultural exports like beef and seafood. They improved digital systems to streamline cargo tracking. Think of it like renovating an old train station. You don't just paint the walls, you replace the tracks, modernize the signals, expand the platforms, and improve the scheduling system. That's what port modernization looks like. And the numbers began to change. Throughput, the amount of cargo moving through the port, increased significantly over the following years. By 2024, annual cargo volumes reportedly hit record levels, surpassing 30 million tons. That's a major jump compared to earlier years. For the Northern Territory, this mattered. The region has a small economy compared to Australia's major states. A growing port means more shipping contracts, more logistics jobs, more truck drivers, more warehouse workers, and more related services. It creates economic ripple effects. Tax contributions linked to port activity also became meaningful for the local government. Even when reports showed the port operator facing accounting losses during certain years, partly due to global trade fluctuations, operational activity continued growing. That's an important nuance. A company can report short-term financial losses while still expanding infrastructure and increasing volume. It's similar to how a startup might lose money while investing heavily in growth. So here's the complication. The port wasn't collapsing. It wasn't abandoned. It was expanding, which makes the next chapter even more interesting. If operations were growing and infrastructure was improving, why did political opposition begin building? Why did a commercial investment start being described as a national security concern? So, to answer that, we need to look at how Australia-China relations began to shift. For the first few years after the lease, the Darwin deal didn't really dominate headlines. But, global politics was changing. Tensions between China and Western countries were rising over trade, technology, security, and influence in the Indo-Pacific. And, Australia found itself right in the middle. Under Prime Minister Scott Morrison, relations between Canberra and Beijing deteriorated sharply around 2020. Australia called for an independent investigation into the origins of COVID-19. China responded with trade restrictions on key Australian exports like barley, wine, and coal. The atmosphere turned cold, fast. In that climate, the lease of the Port of Darwin began to look different. What once seemed like a business deal started being framed as a strategic vulnerability. Critics argued that a Chinese company operating a port so close to Australian and allied military facilities could pose a security risk. The federal government ordered national security reviews. Media coverage intensified. Public skepticism grew. But after investigation, no immediate legal action was taken. The lease remained in place. Then came a political shift. In 2022, Anthony Albanese and the Labour Party won the federal election. Early in his term, Albanese worked to stabilize relations with China. Trade barriers began easing. Diplomatic dialogue resumed. For a moment, it seemed the Darwin issue had cooled. But politics rarely stays still. As the 2025 federal election approached, polling showed a tight race. National security became a powerful campaign theme. And in April 2025, Albanese announced that the government would move to take back control of the port. That was the turning point. The same leader who had paused earlier reviews was now promising termination of the lease. Supporters framed it as protecting strategic assets. Critics saw election strategy, a move to appear tough on China ahead of a close vote. And that's when the story shifted from, "Is this safe?" to a much bigger question. Is this purely Australia's decision? Or is there a larger strategic influence shaping it? To understand that, we need to look just 15 kilometers away from the port itself. Now let's zoom out even further. About 15 kilometers from the Port of Darwin sits a rotational deployment of U.S. Marines. Every year, thousands of American troops cycle through northern Australia for joint training exercises. This isn't new. The U.S. and Australia have been close military allies for decades. But in recent years, cooperation has deepened, especially as tensions with China have grown. Under Washington's Indo-Pacific strategy, Northern Australia has become more important. It offers geographic access to Southeast Asia, the South China Sea, and critical sea lanes. For the U.S., Darwin isn't just a city. It's a strategic platform. According to publicly released defense planning documents, the U.S. Department of Defense has identified Northern Australia as a key logistics and force posture location. Reports have also mentioned significant U.S. funding, around $300 million, aimed at upgrading military-related facilities in the region. Now here's where the debate intensifies. If Darwin is becoming more important to U.S. military planning, then control of surrounding infrastructure, including the port, becomes more sensitive. Ports aren't isolated assets. They support fuel delivery, equipment transport, ship maintenance, and large-scale logistics. In a crisis, control and coordination matter. So critics of the lease argue, how can a Chinese-owned company operate a port so close to expanding Allied military infrastructure? On the other hand, defenders of the lease point out that Landbridge is a private commercial company, not a military unit. The port remains under Australian law and regulatory oversight. Security agencies monitor activity, and no concrete evidence of wrongdoing has been publicly presented. This is where the issue stops being black and white. It's not necessarily about conspiracy, it's about strategic alignment. Australia is part of defense partnerships like AUKUS and long-standing U.S. alliances. As the Indo-Pacific becomes the center of global competition, infrastructure decisions become geopolitical decisions. So the real question becomes, is Australia reclaiming the port purely based on its own independent security assessment? Or is this part of a broader Western strategy to reduce Chinese influence in sensitive areas? Either way, the consequences won't just be political. They'll be legal, they'll be financial, and they could reshape Australia's reputation in global markets. Let's now look at what happens if the government actually breaks the contract. Now we arrive at the most concrete part of this story, the consequences. When Landbridge Group signed the 99-year lease for the Port of Darwin in 2015, it wasn't a handshake agreement. It was a legally binding commercial contract, approved under Australian law, following an open bidding process. In international business, contracts like this are the foundation of trust. Investors put in hundreds of millions, sometimes billions, based on the promise that rules won't suddenly change. If one side terminates early without proven breach or security emergency, compensation usually follows. And this is where the numbers become serious. Landbridge reportedly paid around $320 million up front and invested heavily in upgrades afterward. If the Australian government forces termination, it may need to compensate not just the initial payment, but also future expected earnings over decades. Some estimates suggest that figure could climb toward $3 billion US. To put that into perspective, that's billions in potential taxpayer liability, money that could otherwise fund hospitals, schools, infrastructure, or defense. And there's another layer. The Northern Territory relies heavily on port activity. If the transition is poorly managed, if operations slow, investors hesitate, or legal disputes drag on, regional GDP could take a hit. For a smaller economy, even a 1% contraction is meaningful. But perhaps the biggest risk isn't immediate financial loss. It's reputation. Global investors watch cases like this very closely. If Australia, a country known for rule of law and stable institutions, is seen as overturning long-term contracts for political reasons, it raises uncomfortable questions. Will other foreign investors hesitate before committing long-term capital? Will infrastructure projects demand higher risk premiums? Will borrowing costs increase? Think of it like this. If a landlord tears up a long-term lease halfway through, future tenants will demand stronger protections or look elsewhere. Now, supporters of termination argue national security overrides commercial concerns. Governments absolutely have the right to protect strategic assets. But here's the critical legal point. To justify compulsory acquisition under national security grounds, governments typically need clear, demonstrable evidence of substantial risk. So far, no publicly released evidence has shown the port triggered concrete security breaches, which means if the lease is terminated, the move could be challenged legally, financially, and diplomatically. And that leads us to the final and perhaps most delicate issue of all. What happens to the broader relationship between Australia and China if this dispute escalates? Because Darwin isn't just a port, it may become a symbol. Because the Darwin issue isn't happening in isolation. China is Australia's largest trading partner. Billions of dollars in goods move between the two countries every year. Entire industries depend on that relationship. Australian iron ore feeds Chinese steel production. Australian wheat and mutton fill Chinese supermarkets. Australian wine, coal, and natural gas all rely heavily on Chinese demand. And we've already seen what happens when relations freeze. In 2020, after diplomatic tensions escalated, China imposed trade restrictions on several Australian exports. Barley faced heavy tariffs, wine shipments collapsed, coal imports were suspended for a period, billions of dollars were affected. It wasn't just governments that felt it, farmers felt it, winemakers felt it, miners felt it. Eventually, relations stabilized and many trade barriers were eased. But the memory is still fresh. That's why the Darwin port decision carries weight beyond infrastructure. If China views the cancellation of the lease as politically motivated or discriminatory, it could respond, not necessarily through dramatic retaliation, but through subtle economic pressure. Trade approvals slow down, inspections increase, alternative suppliers are prioritized. And because China is such a large export destination for Australia, even small shifts can ripple through the economy. So Darwin becomes more than a port. It becomes a test case. Can Australia balance national security concerns while maintaining stable economic ties with China? Can the two countries compete strategically without destabilizing commercial cooperation? Or are we entering an era where long-term business agreements are always vulnerable to geopolitical winds? Here's the deeper issue. If global contracts can be undone whenever political pressure rises, international investment becomes riskier everywhere. Countries may retreat into tighter blocks. Economic decoupling accelerates, trust erodes, and that's why this story matters beyond Australia. The real question is not simply who controls the Port of Darwin. The real question is whether long-term international business agreements can survive in an era of rising geopolitical distrust. So what do you think? Is Australia justified in reclaiming the port on national security grounds? Or does breaking a 99-year lease set a dangerous precedent? Let me know your thoughts in the comments. And if you want deeper, balanced analysis on global power shifts, trade conflicts, and Indo-Pacific strategy, make sure to subscribe and turn on notifications. Because stories like this aren't just headlines, they're signals of where the world might be heading next.